All right, next one is the Finance Advisory Council.
So we have two things in regards to Finance Advisory. They met prior on April 10th at a board meeting. The majority of the stuff was related to the error mark and the athletics and the cuts and the budget worksheet and some of that. There was a brief discussion, and they asked that they're going to discuss that tonight in regards to the construction audit, where they're at in regards to a timeline and projected date of completion. So I'd like to start with that before we touch on the second item.
Go ahead. You do most of the work.
We scanned a lot of documents, and Gary's been putting together a spreadsheet as a potential template. He gave it to me today, so I haven't looked at it prior to the meeting. We talked briefly before the meeting, and I don't know if it's actually doable, but sometime shortly after graduation, putting something out, or at one of the next meetings talking about how it should be on the website or how you want to disclose it for those purposes. The majority of the information is two vendors, McHugh and White, and I forget the owner's rep invoices. There's other smaller invoices that make up the total, but you know, those particular three vendors have been scanned in, and you only have one of the vendors at this point, right?
Yeah, McHugh, but in there is the allocation of 56 million of the 60 million. So it's within there. It's broken up by check, by vendor, by following the time frame from 2000. I don't know if we reached into 2007, 2008 through 2011 was the last payment out.
I think you went January of 07.
Yeah, 07 through January of 11, right? Was the last payment to the paving company once they paved the little lot over there.
Yeah, you need to change the date. Yeah.
Did I screw up the last date?
Yeah, January 11th.
Yeah.
Did you include the, because the auto shop was the first thing that was done, and it was kind of like a little project before the big.
There were three big phases. The auto shop being the first, and then when it got to phase two, it really became mishmash, and then within there, the pool.
That was the resurfacing the track. It was a brand new track. That was the first thing.
That was that side of the, yeah.
Well,
So we have broken out by vendor, by check, and then I may go into a little more detail to show the breakout of how we paid McHugh and what they were getting paid for. There's 7 people that they had here: project manager, supervisor, assistant supervisor, secretary, all those different people, and their associated expenses. So we can go in there.
So for the May count, would you have stuff ready?
After graduation.
After graduation, right? Okay. So June count.
We can show. We can possibly show the summarized pay checks, because that's in it.
There's no second meeting in June. Right?
June, July, or just so maybe either June or July, or we have a count in August. But
were we going to do a meeting calendar? Because that was on the calendar you handed out.
the meeting calendar was approved last year. We had to do it for 2 years. So it's the 2nd and 4th, but there's none for June. There's no double meeting June, July, or December.
All right, so would you be ready for the June board meeting if we wanted to?
Yeah. Would you? Okay.
DVD, okay?
DVD, be all right. All right, then what else is for finance?
I just got to, Mary Ann, can you make a note that the June meeting, will put that as an agenda item, since it's not a Finance Advisory Council. Attached, you'll find a memo from Tim McGinnis regarding our health insurance rates for 2012 and 13 and the comparables to joining a cooperative for the health insurance. This is a first read. Tim will be available after May 1st to answer some more specific questions. Now, let me answer a few questions. This is something that the board has discussed about a couple times now between either closed session or public session, the benefits of joining a cooperative or not joining a cooperative. The proposal is coming to you kind of late, but we were, as Gary asked the question, I think it was the last board meeting or the meeting before the last board meeting, when are the renewal rates coming out? insurance companies hold those renewal rates so that close as possible so they could get to the end of the fiscal year so they can see a projection of what your rates will be for the next year. So the co-op was not going to be able to provide us a proposal till they received those renewal rates, nor was our current provider going to be able to provide us a projected cost until those renewal rates came out from Blue Cross Blue Shield. So there was nothing that we could really provide you to give you. I mean, we could tell you, hey, we think this is going to save money, but it might not. I didn't want to say that until we actually had the renewal rates. The renewal rates came in at the end of last week, so I knew that you would want to get these in your hands. So I had Tim kind of draft up a general memo to you saying, you know, here's what the co-op's offering, here's what our current provider's offering, here's some comparables. Tim Walsh had asked some more additional questions, and I emailed those out today. I did get a hold of a rep from the co-op to provide you some details. I'm not expecting you to read those before today's meeting, or at today's meeting. You can always read them and then get us some questions before the May 8th meeting. The thing that I think we need to analyze is this is not the request that Laura had issued or asked for and then a majority agreed with in regards to having someone come out, whether it's our current provider or if eventually if we go to this co-op, coming out and educating the board on insurance and insurance plans. That's not the case with this. This is a decision of, do we stick with our current insurance provider at a projected cost of this, or do we go over and join the co-op to save it? We can't change our benefits under the collective bargaining agreement for next year. We have to offer the same benefits. We can change providers, but it has to be the same benefits that have been agreed upon in the collective bargaining agreement. We have talked with the union. Their biggest concern is to make sure it maintains the same similar benefits, and they prefer Blue Cross Blue Shield. This co-op is a Blue Cross Blue Shield cooperative. It allows us to still be self-insured, but what it allows you to do is it allows each individual organization to tweak their plan under this cooperative through Blue Cross Blue Shield. So the biggest thing, like Tim wrote in his memo to you, and that you could start to read a little bit, is there is about a 0.7% savings for joining the co-op next year, but there are some projections that you have to pay what they're called runoff costs. And what runoff costs are is that any claims that come in that were filed during this fiscal year but first come into them after June 30th, we have to have some money available for them. So with those projected costs, it's going to come pretty close to a wash with our current provider. The thing that a cooperative provides you is stability in those renewal rates on an irregular basis, because you have 70, 75 schools all using Blue Cross Blue Shield and providing their claims. It provides you some stability so that you're not guessing in your annual budget building process. Is it going to come in at a 10% increase, 20% increase? They provide you some consistency, so it helps you in your projections for your budgeting. So I've talked with the rep from Gallagher, the EBC co-op, which is Gallagher is the person that manages it. They're going to come to the Finance Council in May, and also they would be willing to attend the May board meeting. But before, I don't want us to go, I mean, the board obviously has a right to go into it. I don't know if we need to go into as much detail on what's the plans we're offering and some of those, as much as it is like, here's what you're offering, here's what it's going to cost, this is what the co-op is going to charge. That's what we really need to be looking at to make a decision on for next year. And Gary's kind of been the insurance expert for the group. I'll allow him to add on to whatever I said.
Well, I know you put this under the Finance Advisory Council, but one of the things we had mentioned when we had the council was, did you hear about getting health insurance? And there was still no word yet. So we encourage you, as soon as you got the information, to send it out, even though it hadn't gone through a council. So this is the first time, when I got it in the package, the first time that I was seeing this also. I think part of the bigger issue is, as we have a census here, approximately, give or take, 100 individuals. That's a difficult rating for a health insurance organization to try to come up with claims. It's difficult because there's not a big pool to deal with. By going to a co-op, and I think that's what we're encouraged to start kicking the health insurance around, is to share that, even though you're looked at it individually, it's under the guise of a co-op with a much bigger census overall to to kind of weigh those claims in. And that's kind of the reason, the concept of going into co-op.
But we
So,
you know, explain though, because what I'm missing on, and I told Kevin, is we're self-insured now. You know, if we're all going into the same plan, I'd understand you're in a big group, but if we're going to be self-insured under the other plan, how do you share the cost and exposure with, I mean, I know they have the calculation or whatever, but I can't comprehend how we're self-insured now, we're going to be self-insured then. Everybody in the co-op could have a different insurance
they
plan.
are going to have, they could have potentially a different insurance plan.
So
it's
how does the...
But there are, I think part of it is like a buying power concept out there. When health insurance will look at you, if you're going out there independently with a broker, you're looked strictly at your 100 census. When you're in a co-op, there's this concept of, even though you individually can customize your programs, there's this, Blue Cross has more than just us in there. They'll cut you a buying power kind of discount.
So hence, my wife, who works for the federal government, is under Blue Cross Blue Shield. They would have a very different rate because they're the federal government, Department of Veteran Affairs.
Well, it's a number of individuals in that census where your risk of a shock, even though the shock claims are reinsured, the potential of the number of potential loss claims, which don't hit the shock level, but just before the shock level, are spread out a bigger population. You have a bigger population of healthy and non-healthy to share that risk factor out. When you get down to 100 census, even less, your risk on that pool becomes a lot riskier because of the potential to have that premium not shared upon, and you can hit a lot of these high risk claims where they just hit before the claim level, the shock level.
So the key thing, just to capsulize what you're saying, is this co-op, we're still self-insured, but the co-op then
and I think we should
reduces
let the guy come out here and discuss it better to us with better education. I'm just giving you from the brief as buying health insurance, the brief overviews that I've gotten. You know, and I haven't been in a co-op.
So one thing that is a benefit of the cooperative, as we consider this from financial perspective, is right now we pay an additional fee for any claim that's over $70,000. It's a stop loss coverage. The co-op we do not have to do that. That was part of some of those responses.
Do we save this, show the savings on what the insurance premium was for that stop loss?
Tim should be able to provide that to you after May 1st.
That would offset some of the runoff.
Yes.
The other thing is this new spreadsheet you sent us today with the 139,000, is that an estimate of the runoff?
That's what their underwriters came up with based on our claims and projections.
So we could adjust the numbers instead of the 250 to the 139?
Yeah. Well, or I would say we probably leave some information there. I mean, but I would say instead of 250, maybe we can go 200 or 100.
And we could adjust for the
Right.
excess for the 70,000.
Right.
Because, but wouldn't we still, the other thing that even though we're self-insured in either one, we actually would be paying the runoff over time.
Right.
If we stayed. So should we really be even adjusting for runoff? Right? Because it just gets thrown into the pool the following year.
Theoretically, we should have a liability, right? One way or the other.
Yeah.
On our, yeah, I know.
I mean,
know.
and
Well,
I'm
that's
only
what they
asking
talk about, is
because
having a working cash for that.
without the runoff, the co-op clearly is, based on what you provided, a better choice. With the runoff, it might be a worse choice, at least in the short term, even though in the long term.
And that's one of the things I want to talk with.
I
want to talk with the. Even though we're analyzing this in our additional costs, theoretically, wouldn't we have paid that anyways?
I mean, we'd have to pay it anyway.
It would show up in our claims history, but the idea may be is that we have some stop loss coverages, and would that have got caught the following year, and we would hit a stop loss.
Right.
Because maybe that reaches a certain level, and then you hit a stop loss.
The biggest thing I understood from them when we had a meeting with them earlier in the year, when Tim and I were just investigating this, when the Finance Council said we need to look at insurance, their biggest thing is they pretty much told us we're not going to see an immediate savings. They thought that our immediate savings would come 2 or 3 years out as our rates become more consistent and we could budget
Or like Gary pointed out, as our pool gets smaller, if
Right.
we have some unusual losses from it, our costs would go up
Right, that could be,
at a greater rate.
and we know our pool's getting smaller.
Yeah,
Right.
But the one thing is we have a group of retirees that are still,
can you hit on two other things that I asked? One is, are there other co-ops? I mean, and I asked in the other court, it's over 25,000. Did we have to bid this?
Northern Illinois Health.
And I mean, I'm sorry, is that, what did he send out today?
It's, yeah, it's in the bottom in the responses. This is the largest one for Blue
I
Cross
was in
Blue
a
Shield.
meeting all day, I'm sorry.
In regards to the bid, I would imagine I'm not sure if this is something that's exempt to that because of insurance. If not, we would have them do an RFP and have to put a bid out for that.
Could we do that before we approve it in May?
I gotta check on it. I don't have the answer to your question right now.
Okay, I forgot to ask that question. Did I ask if we had to bid it? I don't know.
Yeah, I can check on that.
I'm sorry, I was in a meeting all day, I didn't have time to
Well,
read.
and that's, as I got these and I recognized there were a lot of questions for this, I wanted to get this in your hands. So there's some time from now till May 1st when Tim gets back. If you have additional questions, you can email it to me. There'll be a finance meeting the week before the May 8th meeting. If in the responses that I sent to you, the guy from the co-op does say why it's required to take action so soon is because Blue Cross Blue Shield will want a period of time for them to process claims and do the transition and some of that. That's what he made it sound like. So,
Fair enough.
All right, so we're going to put this on the May board meeting agenda, all right? And he
Correct.
will be here to present. Marion, can you make sure that's on there?
So Gary, can I ask one question? When we say self-insured, is that something we have to keep because it's what we have? And, I mean, that whole, because we keep saying we're self-insured, would ideally we not want to be? Is that like a type, or I didn't understand that?
it keeps the premiums down, and the way the current contract structure is, we're basically funding
Paying
most
the
of the
bulk.
premiums. So
We are-
you run the risk of managing your census, trying to keep them healthy as possible to keep claims down, and what not going to self-insured, what it does do, it gives you clarity on what your expense is going to be for the year. That's the one thing going non-self-insured. You'll know what your premium is, you know what your monthly allocation, but you're paying a price for that because your premium is going to be a lot higher.
Because they'll assume the same risk that would expect us to have and throw their profit
Right.
onto it. So you should be able to do it cheaper
Right,
on a year-by-year basis if you're self-insured, right?
right.
So being self-insured, if you can control circumstances, so to speak, you should save them.
Well, no, I would think of it the other way. If you are paying an insurance premium, the insurance company wants to make money, or they're
Right.
not going to be in business. So they're going to, if they do a good job, they're going to, in a perfect world, they'll figure out exactly what your cost would have been, which
Right.
is what you pay if you're self-insured, and then they tack on whatever, 10%, 15%, whatever they want to make or cover their cost. So you're going to pay for that.
Right.
Plus, the bigger the census that you have in your plan, like you said before, the better rates you get and the better rates they negotiated with medical providers. Right?
Yeah, just like the current discussion going on with the federal health insurance, right? The forcing of healthy participants to be in the pool helps spread, because now they have premiums coming in on healthy, knowing that their utilization of that premium is going to be very minimal versus the big users of the health insurance. And that's the whole concept out there. So if you have a bigger census, the idea is you're going to have, healthier combined with the occasional.
And then when you're self-insured, if you have the occasional major medical bill, it's capped at the stop
loss.
Right.
loss level.
Yeah, you do manage it by putting a stop loss, so that if there is a claim out to a certain dollar after that level, the insurance will take it.
All right.
But most of your costs in health insurance are not the big shock claims, it's the users of
Okay, we're going to, so in May, the broker will be here and we'll be discussing it further.